Hello and welcome to our channel, Top 10s You Should Know. Let's get real for a second. Most people think investing is complicated, risky, and reserved for people with suits, Wall Street connections, and six-figure incomes. But here's the truth. You don't need a finance degree to build wealth. You don't need to day trade or obsess over charts. What you need is patience, consistency, and a simple plan. In fact, the most powerful path to long-term wealth, it's often the most boring one. Today, we're breaking down the top 15 reasons why simple stock investing can and will make you rich. So grab a pen, because this isn't just theory, it's your future, quietly compounding behind the scenes. 1. Compound interest is a superpower in disguise. Let's start with the foundation. Compound interest is often called the eighth wonder of the world, and for good reason. It's when your money makes money, and then that money makes even more money. A $100 investment growing at 10% per year becomes $259 after 10 years, but $672 after 20 years, and a jaw-dropping $1,745 after 30. All from doing nothing but letting it sit. It's not about how much you start with, it's about how long you let it grow. Simple investing works because time does the heavy lifting. 2. The stock market rewards patience, not perfection. You don't have to time the market perfectly, you just have to stay in it. Historically, the market has always rebounded after crashes. People who panic and pull out miss the biggest upswings. Meanwhile, those who stay calm, stay consistent, and keep investing, even during downturns, end up reaping the rewards. Simple investing is about holding on when others let go. 3. Index funds beat most experts. Warren Buffett once bet a group of hedge fund managers that a simple S&P 500 index fund would outperform them over 10 years. He won. Why? Because actively managed funds charge high fees and make complex bets. Index funds, they just track the market. No guesswork, no picking winners, just broad exposure to hundreds of companies. And over time, that simplicity wins big. 4. Dollar cost averaging reduces risk automatically. Don't know when to buy? No problem. Just invest the same amount every month, whether the market is up or down. This is called dollar cost averaging, and it means you buy more shares when prices are low and fewer when they're high. It smooths out volatility and builds discipline. Best part, it doesn't require market predictions, just commitment. 5. Stocks historically outperform every other asset over the long term. The stock market has beaten real estate, gold, bonds, and savings accounts by a wide margin. From 1926 to now, U.S. stocks have averaged about 10% annually. That's the power of owning companies that grow, innovate, and expand. Stocks aren't just pieces of paper, they're ownership in real businesses. And those businesses build your wealth while you live your life. 6. You don't need to pick winning stocks. Here's a secret most gurus won't tell you. You don't need to find the next Tesla or Amazon. When you invest in index funds or ETFs, you're buying all the winners and all the losers. But since winners tend to rise exponentially and losers drop to zero, over time the winners pull your whole portfolio up. Simple, diversified investing beats cherry picking any day. 7. It can be 100% automated. Once you set up automatic transfers to your investment account, boom, your money grows while you sleep, eat, work, even while you binge watch Netflix. No emotional decisions, no forgetting to invest. It just happens. Wealth becomes a background process, not a daily chore. That's the magic of simple automation. 8. Investing beats inflation. Always keeping cash in a savings account is like watching it rot. Inflation eats away at your buying power every year. What costs $100 today could cost $130 in a few years. But stocks outpace inflation because companies raise prices, innovate, and grow. Investing is how your money fights back. 9. You learn as you grow, not before you start. You don't have to know everything before investing. In fact, most of what you learn comes after you start. By keeping it simple, you reduce overwhelm and increase action. Every month teaches you something. Every chart tells a story. Over time, you become not just richer, but wiser. 10. Dividends are hidden income machines. Some companies pay out part of their profits to shareholders every quarter, called dividends. That's money you earn just for owning their stock. And if you reinvest those dividends, you supercharge your compound growth. Simple dividend investing is like getting a bonus paycheck every few months without lifting a finger. 11. Time in the market beats timing the market. People who wait for the perfect time miss the best days of growth. Research shows that missing just a few of the top performing days over 10 years can cut your returns in half. Timing is tempting, but staying invested is what builds real wealth. Simple investors don't chase, they commit. 12. It frees you from financial anxiety. When you invest regularly, you begin to trust the process. Your money isn't just sitting idle, it's working for you. That mindset shift from fear to confidence is priceless. You stop obsessing over prices, stop worrying about every dip, and start looking at the long game. Simple investing equals emotional freedom. 13. You can start small, really small. Think you need thousands to begin? Nope. Apps like Robinhood, Fidelity, and Vanguard let you invest with as little as $5. Fractional shares mean you can own a piece of Google or Apple for the price of a coffee. It's not about how much you invest, it's that you start now. 14. It builds discipline in every area of life. When you invest consistently, you naturally become more organized, more focused, and more future minded. You start budgeting, you cut waste, you think long term. This discipline spills into your health, career, relationships. It's a ripple effect. Simple investing isn't just about money, it's a mindset upgrade. 15. It's the path most millionaires take. Here's the kicker: most millionaires didn't strike it rich. They invested slowly over decades. According to countless studies, the average millionaire never inherited wealth. They built it through consistent saving, investing, and patience. No lottery wins, no get rich quick schemes, just simple investing done faithfully. Bring it all home. You don't need to be born into wealth. You don't need to hold a finance degree. You don't need to be glued to a trading app every morning or chasing the next hype wave. What you do need is clarity, a vision, a basic plan, and the quiet discipline to start where you are and keep going when no one's clapping for you. That's the real magic behind simple stock investing. It's not about hitting the jackpot. And if you stay committed, even with small, boring, steady steps, you will look back one day and be blown away by how far you've come. You don't need perfection. You just need progress. Now, I want to hear from you. Honestly, have you started investing yet? Are you thinking about it but feel overwhelmed? Or maybe you've been burned before and you're trying to rebuild your trust? Share your story with us in the comments. Your voice might be the spark that helps someone else get started too. If you found value in this, give it a like. Share it with someone who's still stuck on the sidelines. And don't forget to subscribe and hit that bell so you never miss a video. Only here on Top 10s you should, and the quiet discipline to start where you are and keep going when no one's clapping for you. That's the real magic behind simple stock investing.